Welcome to TheoTrade. This is Don Kaufman. April 8th, 2020. Just moments to go to the cash close with the S&Ps up. Another blistering 100-point move inside of the markets. I mean, today, the S&Ps is good for almost to the tune of 4%. The Nasdaq happens to be lagging a little bit. And the Russell, the little engine that could, north of a 5% move. We're going to make a very detailed point specifically about the Russell here in just a moment. So listen, what we're in right here, right now, okay? And I'm going to reiterate a statement from Monday. The first thing is, listen, we're just pinging back and forth between gravity points. And I want to spend a moment or two and discuss that because I think that a lot of people misinterpret some of the comments, and one of those happens to be when you're looking at this absolutely unequivocally inside of the spiders, okay? Yeah, it's a bit of a rally. Like, I get it, 7% on Monday, fairly flat on Tuesday. Wednesday here is good for another, 3.5%. But this appears, okay, in a larger sense to be part of a very classic, okay, move that we've seen in markets that we term, okay, the volatility box. And because we believe that we're in a volatility box, listen, people, it does not matter whether you're rallying, whether you're selling off over here. What you're going to get, okay, is mass movement. There's the closing bell on both sides of the marketplace. And as a trader, I'm going to tell you right now, you can't ask for bigger opportunities than to be in one of these volatility boxes. And sometimes I say, you're trapped in a volatility box. Don't take that the wrong way. Now, let me show you precisely what I'm talking about. When I say don't take that the wrong way, like, again, these volatility channels are phenomenal. What it appears that we are back inside of, and again, we're pinging back and forth between gravity points. And again, I've got those gravity points listed right here. All right. And we've seen, 25.75, 26.26, 26.82, 27.31. I mean, for the most part, that's where we're going to end up today. We're just off. And you can see right there, 27.36. And basically, we're on the 27.31 gravity point. And what this appears to be right here, right now, although we've had some upward momentum, we believe we're right back into, as I said, a volatility box. And what does a volatility box effectively look like? Some of the volatility boxes that we can actually point out, and I won't even go back like years, but not too recent, but nevertheless, here's actually in 2018. This is actually one of the more wild volatility boxes. Note that the gravity points that we're pinging back and forth, okay, are really similar to where they are now. Okay, this right here, that's also a volatility box pinging back and forth between gravity points. By the way, these are not small periods of time. We're looking September, October, November in, again, 2018. This is a period of time of almost, again, 6 weeks. These are relatively common. And what's actually going on when I start talking about the volatility box and so forth? Listen, there's not a lot of people positioning themselves in this marketplace. I know there's a lot of people like, it's going up, they must be buying. Listen, that's not exactly how markets function in the midst of volatility. And I'm going to describe precisely how markets do function in the midst of some heavy volatility. One of the first things that I'd like to point out, okay, inside of the S&Ps, so we're seeing some momentum to the upside. The S&Ps today, come on, they can't even stage 2 million contracts, which for the kind of movement that we're seeing, people, is really light. All right, this is actually fairly light volume in there. Again, in comparison to even just a few weeks ago, and some of the down moves, your 3-4 million contracts. The irony of that is those trades are actually all, also relatively light for some downside movement. So volume's light. Okay, the point though that I want to make with this is when you start looking at a chart, okay, in the S&P futures, because the S&P futures kind of run the roost over here, as the marketplace is rallying up, your interpretation of this, okay, is that traders are going out there and they're turning around to buy stock, all right? And if they buy stock, it actually drives the market a little bit higher. Yeah, sure, okay? But what you're actually seeing right now, okay, isn't necessarily buying stock. So you get traders that turn around and they start to buy. Now, they could be buying because they believe the marketplace is going up, or they could be buying to what we call cover. Covering would be effectively be what? Covering a short position. But covering a short position nonetheless is buying. So if you buy, it actually will kick a server on. The server then has to turn around, okay, and neutralize delta. You see, you have to understand that most major trading firms are very much delta, okay, fairly neutral or moderate amounts of delta. It's called bona fide hedging activity. So when the market starts to go up, okay, when the market starts to go up, they have to turn around and buy to hedge off the delta that they currently have on. And this dynamic is just missed by most people. They don't understand, this is not somebody going out, they're like, yeah, man, I really need to buy me some Apple. Okay. So all of a sudden you're turning around and you're buying ES futures. Now, why do the ES futures matter? Because the ES futures, they drive order flow to the rest of the marketplace, right? It doesn't even matter today what the market did. Look, all right, you don't believe me? Go look at the advanced decline line right there. The advanced decline line, there's nothing really declining. So right now we're in full-blown correlation. When you're in a full-blown correlated marketplace, the only thing that matters is the S&P futures. S&P futures are going to drive the order flow to the S&P 100, to the S&P 500, to the Nasdaq. I mean, it is simply going to drive that marketplace. So all you have to have in some morning like this is a few monkeys that are either covering, okay, or maybe they are outright buying, but it doesn't take much to then kick on servers, and then the delta hedging starts. And if we go up, you have to add positive delta. How do you add positive delta? By buying. And if we go up even further, they have to turn around and buy more. Why? Because it's a trading firm, and a trading firm, okay, is trying to keep that delta pretty much neutralized throughout the course of a trading session. And that's how you get these wicked kind of rip your face off rallies that start to occur. Nevertheless, okay, this is not the quintessential, if you will, positioning yourself. This is not somebody going out there again and saying like, yeah, I really want to go out there and buy Apple. So how does Apple go up? I'll tell you exactly how Apple goes up. Apple goes up through statistical arbitrage. So if a firm is adding positive delta, meaning that they're buying S&P futures right there, okay? So if they're buying positive delta, then there's other trading firms that use what's called stat arb. What stat arb is capturing little inefficiencies, okay, between the S&P futures and individual stocks. One of those individual stocks, of course, is going to be Apple. Why do I pick on Apple? For the market cap. The market cap is absolutely massive. So you expect Apple is going to move, okay, very much in accordance with what a lot of the S&Ps are doing, okay? Or the financials are going to move in accordance with what the S&Ps are doing. So that's basically, trading and volatility kind of 101. And again, what you see in here, okay, is largely misinterpreted, I believe, by most. Now, no question about it. After, you see a 10 or 12% rally, there's a lot of people that are probably going to want to engage this marketplace. All right. I mean, this still could get very, very ugly. Again, we believe that we're going to actually see, again, continued pinging back and forth between these gravity points. And, I think the irony of a lot of this is, okay, you're listening to this, you're like, I kind of get what he's saying over here. Listen, if I'm capable, okay, of sitting behind a screen and picking out specific levels and we're tagging them, okay, within literally a few points on almost a $3,000 product, believe me, okay, this is what's driving order flow right now. It's just trading firms, okay? It's delta neutral trading. It's actually what they term dynamic hedging, okay? And that's effectively what's moving markets. There's not a lot of engagement to the broader marketplace right now. I also will give you kind of a stern warning that volatility still, okay, remains really high on a relative basis. Yeah, the VIX is dropping off. By the way, I don't look a huge amount at the VIX. Look a lot at the volatility futures, but more importantly and more appropriately, have a look at this. This is the VVIX. This is the volatility of the volatility index. Were you aware that the VVIX actually ended up today? That's an unusual one. So the volatility index ends up today. And again, don't get off your game right now, because what you're seeing in this marketplace, when I say it's in a volatility box, just because we went up 100 today doesn't mean we can't be down 100 or 200 tomorrow. That's what pinging between these points happens to be. And again, although we have seen absolutely unequivocally some upward momentum to it, it's just as easy to actually ping those gravity points to the downside. And that's precisely what we saw literally coming out of some of the recent highs into some of the serious volatility of this marketplace. By the way, I'll also have a fun one with you here. Okay. And I think this one's kind of fun and it's worth kind of exploring on your own. I'm not going to mention too much about it, but I want you to look at McDonald's. Okay, and I say look at it on your own. McDonald's came out today, and first of all, it closed up on the day, which is just staggering. So McDonald's closed up about 1% today, and you're thinking, okay, what are you picking on Mickey D's for? I'm picking on Mickey D's for a second, okay? Not because they're McDonald's. They came out with news today that was just horrific. I mean, first of all, they had to raise $6.5 billion in cash. You can call that, good. You can call that bad. They raised cash. Why? Because they needed it. Then you have to actually talk about the fact that they suspended all of their stock repurchase program. I'm sorry. In any way, shape, or form you want to put it, you ain't going to spin that positive. Not to me, not to anybody. Okay? They went out there, okay, and they're saying they're cutting their CapEx. If they're cutting their CapEx, and I'm not a big fundamental guy, but if they're cutting their CapEx, the entire economy, as you well know, is in serious trouble, given the fact the sheer magnitude of McDonald's cutting their CapEx. That is not going to be, okay, a fun thing. Oh, did I get to the part where their sales fall 22%? Oh, yeah, that was only through kind of March, which, again, half of March was actually okay. It was only the second half of March that we were really impacted, and the sales fell 22%. I mean, go on all day. And I just wanted to show you, how did McDonald's end up on the day? Again, this is not people putting money to work. This is McDonald's, okay, being arbed higher with the rest of the marketplace. How's that done? It's just an illiquid marketplace right now, okay, where, again, influence can happen. One last thing I want to hit on this front before I'm completely done with it, okay? And I don't mean to say this to alarm you, okay? But I'm going to alarm you for a second. To give a stance of how volatile this marketplace and what's really, what's really going on in the broader marketplace is, I'm going to zoom in to a very specific candle. Now, I'm going to kind of take you through this. I'm going to open up this left side bar just so you guys can see it, right? And I just wanted to take you into this because, again, we're talking about this classic volatility box and so forth, a little bit more evidence. This is a 1 day, 1 minute. That right there is literally a 1 minute candle. I just blew it up a little bit. This is a move roughly from 2,700, okay, down to, let's just call it the bottom of the candle, all right, 2660. You have a 40-point, okay, S&P move. Now, I've seen 40-point moves time and time again in my career. I ain't never seen a 40-point move on a whopping 20,000 contracts. 20,000 contracts can move the S&Ps by 40 points. You got problems, people. We got big problems. What are the problems? You got a marketplace that is just illiquid and people are skittish. And that's why I'm pointing out everything I just pointed out here, between the volatility box, between pinging back and forth between levels, between the VVIX going up, McDonald's that has horrible news and trades higher. Keep your helmet on. Don't forget it. Last couple of things I want to mention on this evening's video. I've actually engaged in a couple of short positions, and I'm just letting you guys know. The short positions that I'm mentioning right here, right now, these are what we term duration positions. Okay, I am making a few investments right now. My investments, one of them in Intel, is actually to the downside. Okay, it's to the downside. And I'm not out there shorting stock. I am using a deep in the money put, and I am going to be holding these positions for considerable periods of time. Those of you here, members of TheoTrade, be more than happy, okay, to join us for the first hour of TheoTrade in the morning, and I will detail each and every position. One of those short positions is in none other than Intel. Intel, okay, which was effectively down approximately almost 30%, has rallied back to almost even on the year. Me? Listen, if you're going to be short in this marketplace, why not short with some of the strongest areas out there? Intel is one of them. The next one, okay, and this is some of the first times that I've actually engaged technology in quite a long time. Next one, Microsoft. Really similar circumstance. Microsoft's only down 17%. It rallied back up. I mean, Microsoft fell a little bit. In fact, I did most of the shorting in here yesterday. Nevertheless, okay, here's another short position that I'm going to be engaging. And when I say duration, I mean duration. Minimum 3 months. Maximum? Listen, I was short in Boeing for a couple of years. It worked. It just took a while. Microsoft, a short position. And last but not least, and this is one that I've actually had on, took it off profitably, and I'm reinitiating. This is the XLP. This is actually consumer staples. It came off hard, really hard. The bounce, though, has been phenomenal. I've now, re-engaged into a short position, thinking that there'll be another leg down. That may not be today, it may not be tomorrow, but people, all right, if I've actually engaged in a duration short position, I'm going to let you know about it. And by the way, when I say know about the positions, I give people each and every one of my positions at a day-to-day basis. This is kind of ironic today. So today, and people always assume, Don's always short the market. No, I'm not. Listen, the S&Ps today are up, some 3.5%. The Nasdaq's a little weak. In this particular account, not exactly knocking it out of the park here, I have a P&L of $322. All right. Why? I was actually hedging off some positions throughout the course of the day. And that's not the only account that I trade within. If you're kind of curious, and I'll total up the accounts here for you. All right. This is P&L. Okay, this is not what I would call and quantify as a winning day. I'm up about $1,400 on the day. But as I said, I like to detail every single position that I've got on. By the way, this is it. Right? This is like the full Monty. I've got the accounts totaled, just so you guys know. In all of these accounts here at TD Ameritrade, this is just over $700,000. I don't have $700,000 vested in this marketplace right now. I mean, I'm looking right now, total margin's about 72 grand. And again, P&L, rather negligible in the last, trading session or two. What I'm doing right now is I'm just re-upping myself. I'm repositioning myself. I'm getting ready. Okay. And listen, I'll pick off like a grand here, a grand there. I'll take that all day long, but I'm getting ready. I'm starting to step up to the plate again. Okay. To produce much more, duration positions, but positions actually that are not only going to stand the test of time, stand the test of volatility, but really I'm going to play out some directional bias. This has been a nice move to the upside. Nevertheless, we believe it's a volatility box. And with that is going to come just that, more volatility on the way. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.